Last month's drop in the unemployment rate was not because of job growth. It was because more people gave up looking for work. Why is this economy still not creating enough jobs?
Well, Mark, the business sector is still hesitant to make that investment. But we shouldn't lose sight of the fact that we are digging ourselves out of one big hole. And the trend is still going in the right direction. Both February and March numbers the forecasts were revised upwards. I think that's good news. Productivity is a little bit down, and that may forecast some forward decisions on hiring as well.
Karen, the labor force participation rate, it's dismal. It's at a new cyclical low. It's at 63.6%. How long can Americans stay on the sidelines and wait for economic conditions and wage conditions to improve?
Well, I think there's two reasons for those numbers. One is you have the baby boomers retiring, so that's taking people out of the job force, and maybe taking them out a little bit earlier, but I think there are retirees who are leaving the job force. Really, the more difficult numbers is the entry into the job force. Jobs for young people are not there the way they should be. Absolutely, that is correct. And part of that reason is it looks like employers, both in small and medium enterprises, are looking for workers with skills, with experience, who can jumpstart productivity.
Right.
And we should focus on that from a public policy matter, and we should look to those policies that help these new entrants get into the job force.
Karen, Bloomberg LP's senior economist Joe Brasuelas pointed out today that the slight job gains we saw in April were in the four low-wage sectors of the economy: retail, temp, leisure, and hospitality. With stagnant wages and disappointing gains in average hourly earnings, what's the risk to the outlook for household spending?
Well, I think the risk is strong. But here's one of the policies that I think the U.S. should focus on. Clearly, the drop in jobs is in the public sector. I think just this last month we shed 11,000 teaching jobs. Now, if we're going to be the knowledge economy, if we're going to be hiring higher wage workers, better educated workers, we have to have better policies. We have to retain teachers, and we have to upskill and train our workforce. We cannot afford to shed jobs in that area. And that's what's happening. And there is a proposal on the table that's been on the table to help states with their payrolls in these areas if they agree not to shed critical jobs in education and in public safety. And there's no take-up on it. And there should be take-up on it.
Well, Karen, Wall Street isn't taking the April jobs report well. In the first hour of trading, the Dow Industrials fell 113 points. And earlier this week, the Dow reached its highest close in almost 3.5 years. If the street starts to lose confidence in the pace of recovery, are investors soon to follow?
No, I don't think so. We can't look at this day to day and week to week. I think the Fed has been very, very bold in saying it's not going to walk away from the economy. You know, interest rates are at an all-time low. They're practically at zero. This is not a bad time for investment. We've got to do what we should be doing in the public policy area to incentivize businesses to hire more workers. Karen, and we can do it, Mark.
Karen, we have about 45 seconds left. I have to ask, you talked about investing. What would it take to get corporate America investing again? Would lowering the marginal corporate tax rate be a good start?
Well, there's a lot of proposals out there. I think certainly that's a step in the right direction. But I think we do have to do more because corporate America has a global workforce. And if we can compete here with a highly trained, highly skilled workforce and a knowledge economy, I think those jobs will come back. So we need to make that investment in the long term.